Hi and welcome to the Market Alert for Monday the 22nd of February 2021. So the Fed could be a source of market volatility as Powell and others speak in the week ahead. So let's just have a look at this and see what we've got. Today at 1 p.m. Powell is going to be out speaking, and then the rest of the week you will see a lot of central bankers out tomorrow. Bailey and Powell are out tomorrow, and then on Wednesday Lagarde is speaking. She's also speaking on Thursday. Bailey's speaking again on Thursday. So a lot of central bankers, and actually Powell is out again on Wednesday as well at 2 p.m. He's in front of the select committee, whatever they have in the equivalent in the US, Treasury Committee. So it's central banker week this week. So again, as the headline says, it could be a source of market volatility as things are starting to fall apart. Things are out of control. There is a shortage of everything as prices are soaring. What happens next? So again, good question. Stimmy hangover, stocks sink as Fed flubs, bond market or the bull market of bonds ends. The game of chicken continues, and that means with the yields. Fed disappoints market, lets SLR expire. That's the supplementary leverage ratio that the banks had. What happens next? Yes, again, another good question. And the Treasury injected a record $270 billion in cash in one day, sending short-term rates negative. That's on the 3-month bills. Yield, meanwhile, overnight is 1.675, but again, we saw this spike. In fact, it's actually on the overnight. You can see that it's been up to 1.72, but at the moment is being forced to the downside there. So a lot happening. Implied volatility also making a new low on Friday as well, down to 1650 from 174, which is odd given that the market dropped. I'd imagine that's the low for the time being. And the moment you see there green as well, but green warning that we could see a spike in the implied there. So we've seen the news, and the only other remaining piece of news is that's interesting that COMEX trend silver short squeeze appears to be on track. Not without they first give the silver price a hammering, which they're about doing as I record this video at the moment, down nearly $1 overnight, over $1, as they've hammered the price of silver to the downside there, but finding support at 25.50 as I record. So let's have a look, see where we are in the bigger picture with these markets. The Dow down on Friday, but finding support at the moment. Interestingly enough, even though the Dow was pushed down on Friday, the implied volatility was moved lower. Prices have closed below the 5-bar moving average. They need to hold above Friday's low. If they break this, then we're heading down to the 38% level there. In the German DAX, if I can find the chart, you will see again similar picture. Prices coming off the low on Friday, coming off the 62% retracement there, failing so far to close back above the 50%, with the market there struggling at the 5-bar moving average. And overnight, you can see prices have been quite volatile. As we just move over to the start of the 22nd, prices already trading below the 200 MA and the DP level there, the daily pivot. Also the close, trading down to the low early on, but finding support coming back up to the 200 MA there, but you can see the selling at this level, and the same here as well when we got to the 200 MA and also the 14,600. Markets sideways at the moment as prices consolidate and wait for the futures market to open at 7 a.m., which is around 20 minutes away from recording this alert. So on Friday, the market fairly quiet given what happened on Thursday, but we did see the intervention of the Fed once more. The futures market moving to the upside, heading towards the DP. and then you'll see prices open in the cash market. Became a bit volatile as prices came down to the close, and then you can see them buying back in at this level here at 60, just below 14,683, just below the 1700, through the 1700. Very volatile to begin with, as you can see, a lot of fighting going on. They sent the market back down, had a look, went to the scalp, and then brought the market back. And again, you can see them buying there, and that's exactly what they're going to do. They need to try and keep this market on the highs if they can do this. Also, prices there finding resistance, didn't fill the buy order, and again, you can see we're stuck in a sideways move. But eventually prices are whipped back really quickly here, get an increase in volume heading towards the DP. So mission accomplished, some potential weakness there as we see with the upthrust, and then prices through the DP, but struggling initially, and again you can see coming off the 38% in the daily chart, and then sideways back below the DP, and then this becoming a bit of a magnet for prices, as you'll see there. A lot of weakness as they try and move prices to the upside, and not successfully in one direction bar after bar, but a lot of choppiness in the market there. And the yield back up to 169 at this point, and then into a sideways move. So I'm going to move on to the afternoon session, where it got interesting, because just before the market opened, half an hour or so before, you can see that the DAX moved sharply to the downside, and once again they've managed to bring up the yield to the 175 area. This was a problem for the market, and you'll see that here I kept the yield on for the afternoon under pressure for a 50 or 60 bars, and then you'll see prices then starting to retrace. And just as we saw on Thursday, the Fed came in and brought the market back, even though the yield remained in those mid 70s, as you can see there. So no surprise, and this is why it cost them 275 billion to try and keep these markets up just for the 1 day there, as the yield was also heading in the same direction, which is unlikely to continue once the yield breaks the 175 level, and this will put further downside pressure on the metals market as well, which is exactly what they want, because they want to move the market down and put pressure to the downside so they can buy back cheaply. Let me just have a quick look at the silver market. So you can see overnight the price of silver has been hammered to the downside, and I suspect that this is going to continue to be the case in this market. As I said last time that we discussed silver, they'll want to get this market down as low as they can. And last year in March, if we just go over here, you will see this is exactly what happened before they brought the market up. This is the sort of thing that they do. On this occasion, they managed to get the market down to $12 by hammering the market down from 17. So there's every possibility that they could do this. It would be more blatant with having been fined, or JP Morgan having been fined over $1 billion this last year since doing that, but it doesn't matter. They make billions on the actual trade, and they'll keep manipulating this until they can buy in at a really low price. I wouldn't be at all surprised if we don't see it come down to $25 during today, and also a retest of the low that we had over here and also over here as well, which is going to present us with a good buying opportunity. It's just nothing we can do about the manipulation in this, and if you don't think it's manipulated, then just do a search for JP Morgan and also Deutsche Bank, Scotiabank, HSBC, and put in silver manipulation, and you will see it there to verify exactly what I'm saying with regards to this. So this is classic JP Morgan overnight Asia let's slam the price down and then we can buy back in. So it is stronger than I thought. I mean, given the backdrop of the yields as well, I thought we would have really given this some hammer, as I say, like we saw in these sorts of days here, where you can see how they just absolutely smashed the price down. But in particular last year, and again you can see there back in October, and also the odd day as well here. Well, they'll need to sell, but certainly like last year there in March, that's what I thought they were going to do with this. But at the moment, we're currently holding. We'll just have to wait and see what happens when the COMEX opens at lunchtime. Okay, that will do it for this one. If there is anything else to report, I will let you know. But as ever, thanks for watching. See you in the next one.